Hey guys, today I'm going to do a video on support and resistance in order to find patterns and also how to do swing trades. Okay, so in order to find patterns, I have to do my support and resistance lines. Right. So here we're on a monthly chart. So I'm going to find my support lines first. Okay, so here's a support line. Okay, now I see here's resistance. So I have some resistance right there. And out of these two patterns here, I see I have a bull flag and then a breakout. Okay, just by doing my resistance right here. Okay. Okay, now I have a trend. The trend line here. I have resistance here. I have resistance here. So this trend broke out, and now this trend is breaking out and it's holding that. And this is monthly chart. Okay. So let's check it out. So we had this pattern of a wedge, and then this wedge, this resistance right here, broke out. And then how do we measure to find out how big of a move it's going to be? So we measure usually the middle of the wedge. So I want to say about here. So you measure the middle of the wedge. Okay, grab that, and then you put that to where it fired off. So it fired off here. Okay. Then that's your price target for the wedge. Okay. And about that, so it hit that and it went more. Then it tried to catch support on there, and then it was resistance, and that was resistance, resistance, and it was resistance, and then it just got out of that resistance and broke out. So now we have another wedge that's breaking out. So this is about middle. So grab that. It's breaking out here. Breaking out here. Let's move that over so I could see. There we go. Okay. So price target for the wedge is going to be 1370 on Google Class C. So we had one wedge breakout, and that price target $12.75. Okay. So now let's go down. So that's the monthly. I mean, yeah, that's the monthly. Okay, let's go down to the weekly and see how this looks. So here we have that wedge and then that breakout. And you see the price target here. It's respecting that as support, respecting that as support, resistance, resistance, consolidating on it, and then resistance again, and act as support here, and then broke out. So now this resistance is acting as support now. So this wedge is still good. It's a still good breakout. So now we have another uptrend currently, but an uptrend. And now we have resistance. We have resistance here, and we have support here. So this here is a bull flag. So now we have a bull flag. And now how do we measure the bull flag? We will measure the bull flag by taking the high to the low of the trend, right? We take the trend and we duplicate that trend. And we put it to our support. And lo and behold, we hit where our price target for our wedges. So now we have double confirmation that this is a good price target, as we have one pattern, a longer pattern, saying that this is price target, and now we have a shorter pattern telling us that this is price target. So now price target times 2. So I know that's a good price target for my bull flag, my wedge. So I'm going to be anticipating a break of this resistance. And when I get that break of resistance, I know that in time, whether that's sooner or later, it's going to hit that price target. Okay, so now I got that. Now let's go to a lower time frame. So this was the weekly chart. So remember, you got to know your time frames and knowing when they're going to play out. So a monthly chart, takes a month for a candle to establish. A weekly chart takes a week for the candle to establish. So this pattern could take, this took 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 weeks to establish this pattern. Okay. And, several months to establish this pattern. Okay. So now let's go to the daily. Okay. So the daily, you could see respecting that resistance, and here respecting that price target very well. Very well, respecting that price target. Respecting that price target. Okay. So now we have, this weekly bull flag doesn't look like a nice bull flag on the daily. It's a little choppy. Now let's see if we have another pattern on the daily. So here's resistance. So we have resistance here, resistance down. So I'm going to remove these previous resistance from the bull flag just so we could have a clear. Okay. And then we have maybe some support right here. Yeah, some support right here. So now we have this resistance, resistance, resistance. We have this support, support. Now we have a descending triangle, descending wedge, and it broke out, and now we see that it's back testing. So now that actually looks like when you place this line here, we could see that bull flag, and it looked like it fired off and then back testing. So the weekly bull flag is still intact, and now the daily wedge is intact as well. Let's see here. Let's just remove that. So now how do we measure the wedge, right? We take the middle about here. And we measure it from where it fired. About here. Yeah. So this is our price target for the wedge. So a nice rule of thumb is I like to take the price target that I get and I like to cut that in half at 50%. And I cut that in half to 50% and I establish 2 price targets. Right? So that would be about 50%. Okay? And then that would be my price target 1. So when I'm seeing my patterns and I'm getting a breakout and I'm measuring my pattern from the middle, I get my price target and then I cut that in half, 50%, and I get my first price target. And the first price target has a very high probability of hitting, as you can see here. It hit that price target, and then it came back down, tested that, and now if it's still healthy, it's going to bounce up and continue. Now we have the 50-day moving average here. So if this does break below, it might bounce off to 50 and come back up, but I believe this trend line will hold. So you have to do all your time frames and find these patterns, and that's how you measure them. Get your price targets, okay, cut them in half, and then you get your 2 price targets. So for this wedge here, if I would cut this in half, I would be about here. That's 50%. It's about 50%. So this would be my price target 2 for my wedge. For my wedge, oh no, price target 1 for my wedge. So that measures perfectly with my previous high. And it almost measures perfectly with my second price target. So that to me is a good indication that we're going to test those previous highs, which is previous resistance, and that's 50% of my first price target on my wedge breakout. So I know that if it breaks through there and makes new highs, then my next target is the second price target. Okay. So now that I know all this information, and I know that if I'm going to get this breakout, or if I got this breakout and I got this breakout already, I'm already in this breakout. So as we could, okay, so this broke out and it hit our first price target, and then it came back and it back tested the wedge breakout on the weekly and monthly, and now it formed another pattern, broke out of that, and back testing this pattern. So we're still healthy on this higher time frame wedge breakout and on this lower time frame wedge breakout. So if this confirms that it's going up and I want to make a swing, what I do is I look at, okay, where am I at right now? I'm on or near this support. Okay. So I'm on or near this support. Okay, that's good. And my 50-day is right below, okay, at 1197. So about 20 points below is my 50-day. Okay. So depending on what happens the next day, tomorrow, or whenever the market opens, I'm going to see what's going on here. So if it's going to start going up, or is it going to start coming back down? If it starts coming down and it's holding this and it touches this, then I'm going to be looking to get a swing. And what am I going to be looking for in my swing? Well, I'm going to be looking for my swing to be coming up and hitting that first price target again, if it's going to come back, and anticipating that first price target on the weekly and the second price target on the daily. So the swings I would get is I would go and I would look for 1 week out, which would be the September 14th, as today is September 3rd. So 1 week out would be September 14th. And I would be looking at what options do I want to buy if I'm currently at 12.18.19. I want to get an option that is likely to hit my target in that time frame. So if my first price target is 12.51, I want to look at the deltas, and I want to go no less than 30. And it depends on how much I want to spend, right? Google Class C options are pricey. So 30 is the lowest I want to go. I don't want to go below. 30 is the least. So I would get, if I was very confident that this was going to bounce, if I saw tomorrow that this was holding and it was coming back up and I saw good things, then I would be purchasing September 14th, $12.42.50 options. I would start with a position size of 2. If my full lot is 10, I'll start with 2 and see how the price action is. If it starts coming up and if it starts confirming my directions, then I'll continue to add more. I'll continue to add more of the same option. Now, if I wanted some more time, I like my swings 1 to 2 weeks out. So then my second option would be September 21st. And this one as well, no less than 30. So this 1247.50, I would be purchasing these as if I wanted to get these. If I was confident in my levels holding and I saw that the price action was staying above, I would be purchasing the 1247.50s for 2 weeks out. And the same thing, I would buy two, and then I would wait for more confirmation, and then I would buy some more. And if I did buy the two and it started coming below here and didn't look like it was holding, then I would definitely still wait for the close, since I have higher time frame options, and I would see if it was going to close below this line, and if it closed below this line, then I would get out. Now, if it was holding the 50, I would think about getting back in the next day if that 50-day held. But if it didn't and it closed below the 50, if I didn't get stopped out yet and it closed below the 50, I would 100% be out completely. Okay? So when this happens, I wanna be buying my swings at high probability entries, right? So this resistance should hold tomorrow. So I should be buying here at a high probability support. And if it doesn't, then I need to get out, because if it's not holding, then it's not a high probability trade. I need to get out. So if I go back to the monthly chart, or maybe it was the weekly chart, I could see that I have another trend. Okay. So that intersects over here. So I don't have double support. Well, I mean, I have the 50-day here, so that could be double support, but it needs to come down a little lower. So I might need to wait a little bit until it comes down here to enter, and then I'll have a high probability trade. But we might be okay right here. It depends on what happens tomorrow. So I would be watching that. But when I'm going to do a swing, I'm going to be looking at the daily or the 4-hour chart. So currently on the 4-hour chart, it is holding this line, and it's making a reversal candle bottoming tail, which I like. Now, what it has to do is make a big green candle tomorrow in order for this to be confirmation that we are reversing. If we don't get a big green candle, then it's not confirmation, and it may be still coming down. So I wouldn't be getting in, or I would be getting stopped out. So that's what I'm waiting for. Waiting for one of these big green candles to come up here tomorrow. And then that would be confirmation that we're going to go to my price target 1, and then possibly to my price target 1 on the wedge breakout, on the weekly wedge breakout. Okay, and then for my entries, what I'll be looking for tomorrow is my 1-hour chart. Is that holding? And if it is holding, I'll be entering in. So I'm looking at my 4-hour chart and my daily for my patterns. I'm looking for my patterns. I'm getting my patterns on my 4-hour and my daily. And then I'm getting my entry on my 1-hour because I want the best entry possible. So if I'm holding here on the 1 hour, then I'll be getting in. And that is a high probability trade, as it is you are buying on support. So if that breaks support, then you got to get out, because it's not a high probability trade anymore. Okay, and I will be holding this depending on how fast it moves. If it rallies up after the congressional hearing, then it might hit my price target sooner than later, and I might not be holding it very long. Or I might be taking some off and letting others ride and seeing how high does it go, because this is a breakout and it's consolidating, and it has a bear flag on the, a bull flag on the weekly. So if it breaks the high, it's breaking the bull flag on the weekly, and it's going to continue to go and hit my second price target. So I might be holding them for the whole 2 to 3 weeks. So we'll see. Okay, guys, that's how you get patterns using your support and resistance, and then you measure them by taking the mid and drawing a trend line down, and then taking that trend line, putting it to the breakout spot, putting your price targets, and then 50% of that is your first price target. And as long as remember, resistance above becomes support. As long as that support holds, this is good to go. Okay, so this might see alphabet class C might see 1278 this month or higher. So if we get 2 big candles and breakout this month, we could probably see 1300. That's a big move. All because we've done our homework. We did our support and resistance lines. We did our measurements of our price target, and we cut it in 50%, and we're buying at strong support. So if this does come down, then this area here would be strong buy. Even the 50-day would be a buy. So we have to see where she's going to turn. But I have a feeling that she's going to turn. Well, guys, if you liked the video, please give it a thumbs up and subscribe. Any questions, leave a comment, or if you're in the private Facebook group, just let me know. If you want to be in the private Facebook group, I'll put the link in the bio, and you could join. It's free, and I do analysis like this all the time. So I hope you guys learned something, and hope you guys make some money this week. All right, guys, happy